3, 2, 1, yay! Alright everyone, this is James from Dividend Stock Talk. Brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Take you along for the ride for that safe, predictable, consistent 1%. Today is the 7th of August. August 7, 2024. Say hi to all these people. Hi to the nice people. Alright, so what am I looking at? I don't know, I might have to move it down over to here. Anyway, that being said, let's get ready. Ready to rumble. Ooh, look at all these people saying hi too. Good morning, good morning, good morning. Joseph, Texas meme, what's happening? Alright, so let's get ready, get started. Anyway, first of all, my name's James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks, weekly cash flow, take you along for the ride for a safe, predictable, consistent 1% per week. Today, Wednesday, not a whole heck of a lot happens on a Wednesday in my world. We just get a little bit of balancing out on our account, see where our current positions are, and then from there, I move on and just, proceed with my day. Not a whole heck of a lot happening. Fun, fun, fun. Alright, you flipper. Joel Suppley. Cool beans. Jeffrey's here. Way to go. Alright, let's get ready. So let's go over the positions currently on hand. AEO is top of my list. Now AEO, usually I buy a stock on Monday. I'm usually out by Friday. Usually. But every once in a while you have a stock that just lingers. And just hangs around and does a lot of nothing. Well, that was AEO for me. American Eagle Outfitters. Michael, hey Doc, how you doing over there? So, that being said, let's take a look at the numbers. What happened with AEO today? The Chapa. What's happening, Chapas? Zappening, y'all. Zappening, y'all. Okay, cool. Interesting name, Steve. Alright, a year ago, AEO is sitting at 1521. The bottom is 1434. Topped out at 2647, and that was back in the beginning of March. Now this thing dropped quite a bit from where I jumped in. Quinn's here. Mr. Cricket. What's happening, Mr. Cricket? Last 30 days. Look what we've done for the last 30 days. 30 days ago, we opened up at 1939. Now, when I always look at a chart, there's 5 things I want to see. There's 5 things I want to see when I look at a chart. Where's the high? Where's the low? Where was it? Where is it? And which direction is it going? Okay, so 30 days ago, we're sitting at 1967. All right. The high for the 30-day period, 2256, and that was last Thursday. So from Thursday, Friday dropped. Sorry, that was last Wednesday. Thursday it dropped. Friday it gapped down. Monday she's down. Tuesday she's up, and today she's up. So you guys heard me say it over and over again. I like buying at a 30-day bottom, and then 2 days to the upside to isolate where is the actual bottom. Now, I like 2 days to the upside. Some people want more. Okay? So, Mr. Darrell, do you sell covered calls further out in time if stuck with a stock if a certain week not worth it? Absolutely 100% correct, Mr. Darrell. If this week's options aren't really worth anything, well, I'll go a week out. I'll go 2 weeks out, someplace where it makes sense. But you always got to remember the flow of where the stock is going. Now, you and me, we're the ones who create this mess. Okay, the highs, the lows. We jump in and we say, hey, it's worth more than this. Or, hey, it's not. It was just one of those things. Well, at this moment in time, 30 days ago, she went up, a little bit of correction, back up. There's your 30-day high, way up there. Then she drops. Ralph! No, it won't, Adam. Okay, so then she drops, and then now going back to the upside. Okay, they go up, they go down, they go up, they go down, and what happens after it comes down? Finds a new bottom, which is your support, and then she shoots back up again. Well, that's where we're going with AEO. Now, it's currently at $20.07. My position on this one is the 21s. Alright, so I sold the 21s. Hello there, man. Hey, someone, how are you today? Wonderful, wonderful. Alright. So that's AEO. I see no problem whatsoever in what's happening tomorrow and then Friday. I mean, I would like it, personally, for selfish reasons, I would like it to stay right where it is. Because I sold the 21s. Weird thing, I didn't get a notification of your stream. Oh, I don't know what to tell you there. I'm not quite sure. Well, it's on every night. Every night at 9 o'clock. Or somewhere there was about. Do you trade futures? No. Or commodities? No, I used to, Ralph. Not anymore. Simone, how are you? And Simone wants to look at Macy's. Well, of course she does. I like Macy's. And this is like the longest time I've gone without owning any Macy's. Alright, a year ago at 1605. Bottomed out in October and again in November at 1049. Ooh. Now, from 1049, we hit a high at 2217, and that was in the middle of March. From there, she drops down. Look at that trading range. Okay, that is cool as anything. Okay, from December all the way in, and then we just recently dropped. Okay, so maybe she'll jump into a new trading range. I don't know, but let's take a look at it. Lucky Larry's here. That's a nice trading range to high there. Last 30 days. Let's take a gander at the last 30 days. Here we go. Last 30 days. Check out those numbers. The first big gap down is on the 13th. Okay, 30 days ago we opened up at 1949. Topped it off with a double high somewhere right around 1971. Then on the 15th right here, she gaps down. I love a good gap down because they have a tendency to fill, which means I have no problem whatsoever buying down here because eventually she's going to back up to that area. Eventually. Need to flip the camera. Sorry. Every once in a while I forget something. Alright. So, that being said, 3 weeks ago we had a big gap down. Last week we had a gap down. And this week, from Friday to Monday, we had another gap down. That's 3 gap downs in 30 days. And this is a company that's been in business for over 100 years. They turned down a bid this year. I think it was at 22. I think they said no. I said, from the article that I read, they said no, and then they would buy back the shares themselves at 24. So why would I not want to jump into Macy's? Look at the numbers. Right now it's at 1539. The 1550s. We're not going to go by this week's. Because even though this week is at 8 to 21. Well, all right. But there's only 2 days left, Thursday and Friday. Not a lot of time there. Hey, what's up with Japan stock market? Okay, someone, I honestly couldn't tell you. I really don't pay attention to the news. I'm stuck in my own little world. To be totally honest with you. I mean, I pay attention to what's going on in the market with the companies that I look at. That's about it. Other than that, I'm not really too concerned about those things. Okay, so next week's 1550s are going for 27 cents. Well, that's a nice return. That's close to 1.5% for the week. And we talked about that yesterday. Okay? We talked about that yesterday, and not a whole heck of a lot happened today. So she opened up, and she pulls back a little bit. Still 2 days to the upside. I don't know, but today's is a little bit lower than yesterday. So I'm not quite sure on that one. Okay, I'm not into it yet, but I have no money until Monday anyway, because all my money's invested already. So I get 98% of my money's invested on Monday and Tuesday. Okay, Friday is when I figure out what's happening. Where's everything going? Alright. So that's Macy's. I like Macy's. But I'm not into it this week. That being said, next on our list, NEE. N-E-E. Well, I haven't looked at NEE in a while. N-E-E. Let's go find a place where to put it. Right there. N-E-E. There we go. And that's going to be a no this week. Not that I don't like the company, because I do like the company. But look at the chart, okay? This is where we are right now. 30 days ago, what, just above 69? And now she's sitting at 77? Well, that's over 10 bucks. And over 10 bucks means, it's a, profit taking waiting to happen. All right, so from there, I'm going to write need, not for next week, but for 2 weeks out. Because I'm going to give it a little bit of time for it to fall. Because right now she's at 77 and she's still going, up strong. So if it's still going up to strong, in a couple more days, eventually it's going to turn around. Because if it didn't hit 82 before, or 81 or 82 before, what makes us think it's going to hit it now? So there's a little bit of space, not much. I'm not quite sure I would do it. 78.19 to 78 to go for 147, to 79 to go for a buck. Well, they're both over 1%. Okay, so if they're both over 1%, I have no problem doing either one of them. Oh, hit the wrong button over there. I was wondering why it was keep going and going and going. All right, what are we looking at next? No? Nobody wants to look at me? Oh, yeah, so we're putting Nextera Energy, not next week, but the week after. That gives it plenty of time to find its top and turn around. NEE. Alright, so NEE is written down for the next 2 weeks. We'll keep our eye on it. So as soon as she drops down, finds the bottom, yeah, because I like the numbers. Over 1% works for me. Nextera Energy is a great company. Bodo Glint, yeah, it is. But I'm saying that not this week, okay? Because you're buying into the high. Could it go up? Yes, it could. But I don't like chasing, someplace they've never been. That's like going someplace you've never been before. Well, they've never been to 82. Not anytime soon, anyway. All right, so that being said, next on my list, Walgreens. We look at Walgreens all the time. Some people must be saying, hey, you must love Walgreens and Macy's. That's all I ever look at. Well, yeah, I do look at them often. Okay, a year ago, 30 bucks. I look at 5 things when I look at a stock. The high, the low, where was it, where is it now, and what direction is it going? That's what I want to see. Zotist, CME Group. Okay, Bodo, you got to give me the ticker symbol. Okay, CME, we'll take a gander at it. CME. All right, so CME's on the list. Why hubs up? It was supposed to go down. I have no idea what ZUB is. Oh, ZTS. Zotis, huh? And hub, I've never heard of it. HUB. Alright. Let's finish up with Walgreens. Oh, finish up. We just started up with. Just jumping on first time love the Divvy Talk. Well, if it's your first time, alrighty then. Okay, so Walgreens a year ago was at 30 bucks. That was the top a year ago, 30 bucks. She drops all the way down to where we are now, which is kind of on the low side for Walgreens. The past couple of days, she's hit new bottom for the year. Right over here, yesterday. Last 30 days, let's take a gander at this. Okay, so here's the last 30 days. 30 days ago, we're on 11. Shoots on up, pulls back, our 30-day high, 12.25, drops down to here, 10.42. That was Monday. Tuesday was an up day. Wednesday was an up day. That's your invitation to jump on in. I like 2 days to the upside. Reckon Sloan, Aurora Innovations. You actually got to give me the ticker symbol because, especially with companies I've never heard of, and I've never heard of that one before, so I have no idea. Bro, let me put you on. Go look at Disney right now. It's at reversal point. Cool. We're going to write Disney down. We'll take a look at that one also. Disney. Alright, so we're going to take a look at Disney a little bit. Thanks for that, Jose. XRP, yeah. Okay. You have fun with your XRP. So I actually like Walgreens, and I do actually own some Walgreens. I love a 30-day bottom, especially coming off of a 30-day top. 30-day top, 30-day bottom, 2 days the upside, and that's my bottom. That's my invitation right there. That's for me. You guys got to figure out what you look at. G, Chevron, MSTR. Never even heard of it. Wait a minute, yes I have. What were you writing down? Aura. AUR. What the heck is that? AUR. Never heard of it. Isn't that weird? Alright, Chevron and MSTR. CBN. MSTR. Okay. Alright, let's finish up with Walgreens. Little risky, but can have a really good return. Chaz, I'm not quite sure what we're talking about. Charlo, Dollar Tree, DTR. That one. Alright, let's finish up with Walgreens. So Walgreens right now, 1076. The 11 is going for 24. That's 2%. Okay, what is this week? We got 2 days left for this week. The 11s this week is going for 8 to 10, a little bit under 1%, but okay. Alright, next on our list, Walmart. Somebody wanted to look at Walmart. MSCI dropped 108 today. And you guys, anyway, we had a whole bunch of people asking about that stock yesterday. Daniel's here. Look at Disney next, bro. Trust the 5-year chart, any time frame. Okay, Jose, I'll get to it when I get to it. I got a lot of other people coming up before you. So, we just finished up with that. Walmart is next on the list. WMT, Wally World. WMT. Okay, I'm going to say no to Wally World this week, only because just a little too high. Got way too much profit taking here. Okay, if you want down here, yeah. So we're going to put Walmart on the back burner. Last 30 days. Here we go. Okay, here's our last 30 days. This thing's going to be ready to turn any day now. Look at it. Up, down, up. There's your top way up there. 71.25. Drops down here to 66.91. Well, we can have the bottom any day now. Tomorrow or the next day. That would be great to jump into next week. So I'm going to write Wally World down for next week. WMT. Outstanding. Look at Walmart for next week. Alright, next on the list. UEC. Somebody put this last night. Can you move the camera a little bit? I don't know which camera we're talking about. Sorry, it's I got 6 cameras going here, so if I move one, then the other ones aren't going to look quite right. Yeah, how about right like that? Oh, this one's horrible over here. That's okay, not many people join me on Facebook anyway. I don't even know why. Alright, that being said, let's take a look at Walmart. We're going to take a quick look at Walmart, WMT. 30-day chart looks a little bit like this. 70 bucks, jumps up to 71.50, drops down to 66.91, 66.91, go to 67, 48 cents, not quite 1%. That's for 2 days. But what's next week look like? Next week looks like over 2%, 186. I like Walmart 186. WMT. So Walmart looks great at where it's at the moment. Now, next on our list, we're going to take a look at Target. TGT. Now, Target is one of those companies last year that I held for a lot longer than I wanted to. I actually took it for over 6 months. Got it 135, drops down to 102, and I held on to it until it got back up to 135 again. And that took 6 months to do. There we go. Alright. CCL, put that down. CCL. CME. CME. CME Group. Yeah. Sorry, CME Group's going to be a no, only because it's a monthly. What does that mean? Well, monthly optionable stocks only can do it. You can only trade options once a month. Once a month, let's say you get 1 or 2%. Well, the max you're going to get is what, 24% per year, if you like it. And then you have to guess, where is it going to be in the next 30 days, which is 4 weeks. Well, this one's going up. I honestly don't think it's going to go up continuously for 4 weeks. Because if I'm wrong, I have to hold it longer. And the numbers just don't work. See, right now it's at 205. The 200 is going for $6. Alright? Which means I lose $5 right off the top. So then I'm only getting $1.10 on a $2 stock, on a $200 stock. Well, I've got to hold it for 2 weeks. And those numbers just don't work for me. Okay? So you're bringing in 0.5% for this week. That makes no sense at all. Okay, 0.5% for a week? No, because then you're walking away with what, 24% a year? I mean, some of you guys might be okay with that. I just don't like monthlies. They just don't pay the same. Lockheed Martin, LMT. See, some of them I know right off the top of my head. LMT. Now, Lockheed Martin is on my list. We'll take a look at it. So CME is going to be a no. Sorry. ZTS. 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 Now, to be 100% honest, I've never traded ZTS. There's a reason why. It's a monthly, which means I can only do it once a month. What is this one paying? 192, 190 is going for not even 0.5% for 2 weeks. Yeah, no, the numbers just, I've never seen the numbers actually work on monthlies to make them attractive to me. So ZTS is going to be a no. Nike, ooh, SPIX, NKESVIX, never heard of it. Hub, H-U-B, H-U-B. Can't find that symbol. HubSpot. HubSpot's going to be a no. Okay. $400 stock. Yeah, no thanks. Next on the list. Now we're on Disney. CGC. Disney. Somebody wants to look at CGC, huh? CGC. Never heard of it. Hess. Ooh, Hess is a good one. H-E-S. Alright, so Hess is on the list. Let's keep on rolling. Oh, I knew. You see, someone always has to mention Tesla. Tesla's going to be no. TSLZ. Home Depot. Apple. HD and Apple. Okay, we'll get to those in a little bit. Just give me a little bit of time. We'll get that. Look at the resistance, 5-year time frame, and all the bounce. Okay. Who's asking about Disney? Jose. Now, Jose, you're under the impression that I look at the 5-year chart. I don't. What I look at the 1-year chart, 90-day, 30-day, and then seasonality. Because I'm buying on a Monday and selling by a Friday. I'm not doing long term. 5-year chart makes absolutely no sense to me whatsoever. Because I'm not buying to hold long term. Where 5-year chart may be an important, important chart to look at. But at this moment, 1 year, 90-day, 30-day, seasonality. Alright, so here's the 1-year chart. 5 things I want to look at. High, the low, where was it, where is it, and what direction is it going? Well, it's in a downtrend. Okay? So you think this is so wonderful, let's take a look. 85.43. We're looking at the 86s, and the 86s are paying $1.76. That's 2%. That's a little over 2% actually. Okay, there's the price up there, 85.43. The bid and the ask. Okay, now at the current ask price, 85.43. The 86 is going to be closest, 176. What exactly is that anyway? Let's do a quick calculation for the rate of return on Disney. Okay, 85.43, the 86s are going for 176. So 176, and then we divide it by the purchase price. The purchase price is 85.43. 85.43. So my rate of return for the week is 2%. But here's the thing. If the stock is above my strike price come Friday, I also get the difference between the purchase price, 85.43, and the strike price, the 86. Okay, so the difference between that is 50 and an additional 57 cents per share. So I get a little bit of a capital appreciation along with the 2% from just the premium. Okay, fine. I like 2%. And so let's take a look at the charts. Okay, a year ago, okay, so actually we're looking at the chart now for Disney. A year ago, we're at 86.81. Bottom of the year was 87.92, and that was back in October. Topped out at 123.45, the beginning of April. Now, since April, she's been in this huge downtrend. Look at it, just down. Now we're sitting at 85.96. Okay, it was at 123. That's a big drop. Last 30 days, still dropping. So 30 days ago, we're sitting at 97.69. 30-day high was 98.72. The 30-day bottom was today. So what is that going to mean? That means we're going to keep our eye on Disney until it actually finds its bottom. Look, up, down, right here where we are now. Well, where's she going to go now? Eventually, she's going to find that bottom and go back up again. That's what stocks do. They go up, they go down. So I want to keep my eye on it just so that I can identify when the bottom comes. Because the bottom's coming eventually. Because that's all stocks do. They go up, they go down, they go up, they go down. Well, this thing's been going down for quite a while. So we'll keep our eye on it just for the next couple of weeks to see what happens. So let's take a look at next week's list. Okay, now Disney is on next week's list. Alright, so we'll take a look at it next week. Hopefully we'll get that bottom pretty soon. Alright. ENB. ENB. Never heard of it, but okay. Oracle. O-R-C-L. Now, I got someone here in the audience asking me about O. Now, I'm trying to ignore it because O has always been a no. And I'm assuming you're new here, so you probably don't know how much O is a no. Okay? Now, I look at O all the time because people always look at me and say, hey, what about O? They pay monthly dividends. Well, wonderful. They may pay monthly dividends, but here's the thing about O. Number one, it's at a high of the year. No, that's a first no. Number two, it's a monthly optional stock. That's a no. Now we're going to go back and we're going to take a look at Yahoo Finance. Now, Yahoo Finance, you know what I didn't ask? Did anybody check and see if the YouTube is working properly? Now, we're going to put O, okay? O, Income Realty. We're looking at O, Income Realty at Yahoo Finance. The very first thing I want to see is how often do they pay dividends. Well, we're going all the way back as far as we can in historical performance, where the information is stored. Now this thing goes all the way back. Oh, it goes back quite a ways. It goes back to 2009. So I'm going to read some of these dividends to you, and you see if something comes out at you, and you see why I don't like it. This will be reason number, what, reason number 4. I don't like O. What about O? It's a stock that barely moves up and pays dividends. So what? Not your average wolf. Well, alrighty then. I'm giving you reasons why I don't like it. I'm on reason number 4. 2009, they started paying dividends. Well, not that long ago. Okay, not 20 years anyway. Yeah. Nope, not 20 years. Okay, so 2009 it was 14. 2010, 14. 2011, 14. 2012, 14. 2013 was up to 15. 2013 then jumped to 18. Okay, and then what is that? May 18, so okay, 2014, 18, 2015, 18, 2016, 19, 2016, 20, and 21, and 2017, 2018, 21, 2019, 22, 22, 23, 23. Yeah, you know what? It goes up very slowly. Okay, not consistent. Okay, I like consistency when it comes to dividend stocks. I want it to increase every single year. O doesn't do it. Okay, let's go quickly to a summary. Now, a summary is going to give me a little bit more information. All right. So the dividend for O is $3.16 for the year. What is that yield? That's a 5.22% yield. Okay, so I'm showing you how to get 1% per week, safe, predictable, and consistent. And you're showing me something that gets 5%, 5.2% for the year, doesn't increase their dividends, and doesn't have weekly options. So it's a no, 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 no. Okay, you know, it's like a whole bunch of reasons why it's a no. No to O. It always has been. YouTube is working. Cool beans. All right. So the next company we're looking at is going to be AUR. AUR? What the heck is AUR? Aurora Innovations. Monthly optional stock? No. Okay, now I would love to be able to say, yeah, great company. I would buy it, but no, I wouldn't buy it. Charlo, thanks for explaining things so well. Making sense. All right, Carlo. Okay, thanks for the explanation. No, think of it this way. Okay, you're here for a reason, whatever it is. Me, I personally like a safe, secure, predictable, consistent 1% per week. Well, a lot of people might say, yeah, 1% a week sounds good. That's 50% per year. This is slow. This is boring. This is the same things over and over and over again. Great, fine, dandy. But you got to ask yourself a couple of questions. Dustbuster, how's it going? Ask yourself a couple of questions before you do anything. This is your hard-earned money you're talking about. Nobody has more interest in your money than you do. So why wouldn't you? Think about it. Why wouldn't you pick something that makes sense, number one, that you can explain simply and easily? Okay, where's your money? What do they do? Are they profitable? Is it something you would recommend to your friends and family? These are a lot of interesting questions. But my number one, well, I have a few questions. One of them is, does it make sense? Okay, is the company I'm looking at a good company? Well, Disney, we were looking at a little while ago. Yeah, it depends on how you look at it. Sometimes, the new administration there, not quite going the way traditional Disney went. So they're trying something new. Doesn't seem to be working, but not the point. They get name recognition. They've been around for a while. Yeah, they're getting beat up a little bit, but eventually they'll get their legs back and they will find where their bottom is going to be. So I'll keep my eye on it. And then how do you analyze how good a company is? I'm going to tell you really quickly. I'm a really lazy trader. I really am. I like Cliff Notes. Now, I don't know if you know what Cliff Notes are. Cliff Notes kind of like a cheat sheet. Instead of going to see a movie, you can get a 15-minute wrap-up. This, boom, there you're done. We used to do that with books. Instead of reading, 200, 300, 400-page book, you get Cliff Notes. A couple of paragraphs gives us an idea of what happened. So we don't have to spend all that time. So what do I mean by that? Future revenue is how it's all forward-looking. Not your average wolf. Okay, all right. Now, I'm going to make the assumption, not your average wolf, that you're not retired and that you're looking for capital appreciation, which is nothing wrong with that whatsoever. So basically, I'm going to just let you know, you're definitely in the wrong place, dude. I am not forward looking for revenue, none whatsoever. I look for consistent, profitable companies. So if I'm putting my money into a company, I want to make sure that they're profitable and consistently profitable. I'm not just talking 1, 2, 3, 4, 5 years. No, no, no. The only companies I like have 20 years of increased dividends. It's kind of like cheating because I'm not reading the quarterly reports. I'm not reading the annual reports because I know numbers don't lie. Facts are facts. If a company is paying a dividend, so there's two companies. One is going to take all the profits, put it back into the company so the stock price will grow, grow, grow. That's called capital appreciation. Great, wonderful. If you're younger, okay, me, I'm 60 years old. I have no desire whatsoever to put my money into anything, wait for it to grow before I take it out. No, no, no. I want actually, I don't want it, I need it. Okay, that's where I am at in my life. I have a certain amount of money. I have it invested at 1% per week. It pays my bills, my personal bills. Okay, that's all I personally need, just 1% a week. That's over 50% per year. If you can live off of 50% of whatever you have. I have no idea what you have. I know what I have. Now, I have 6 different accounts. I share 3 of them with you guys. Or do I have 7? I forget. Anyway, I share a couple of accounts with you guys so you can see what the numbers look like. I have a cash account. I have a margin account. I do this type of trading in one account, specifically this type of trading, because I came how it came about was when my 9-year-old daughter wanted to learn how to trade. How do you teach a 9-year-old girl how to trade stocks? That's nothing to be about. It has nothing to do about being a girl or a boy. That part's totally irrelevant. Okay, the numbers are what the numbers are. The stock market is what it is. Well, at this moment in time, there's 9,597 stocks available every single day. That's almost 6,000 choices to choose every single day. So how do you figure it out? Well, me, personally, this is just me. You guys got to figure out what you like. All right? I only like companies that have consistently increased for 20 years. Because here's the thing. If a company is profitable, they're either going to take the money, put it back into the company for capital growth so the stock price goes up, or they're going to share it with their investors. That's you and me. Once we buy and sell stocks, we become either investors or shareholders. Now, I'm an investor or a trader, however you want to look at it. All right? But there's only certain stocks I look at. And the reason is because if a company is profitable, they're going to share their profits with their investors. Okay, that's worked into the equation at the annual report somewhere. Now, do I have to read it all to figure it out? I could if I wanted to, but I don't want to. Because if they increase every single year after year after year after year, 20 years, okay, that means they must be doing something right. Okay, if they're increasing every year, I don't have to read the annual report. Because if they weren't profitable, they would be taking the dividends away. If they start taking the dividends away or the dividends start to decrease, that gets my attention. Now I have to go in and read the information. But as long as it has 20 years or more of increased dividends, I don't even bother. Because I'm looking for increased dividends and weekly options. The reason I want weekly options is so I can get a weekly paycheck. It's actually that simple. Because the strategy had to be safe. Wait a second. It had to be simple, safe, predictable, consistent, and in no way that my daughter could lose. So the only way that could happen, I had to come up with a couple of rules. 5 rules specifically. 1, never buy something you do not want to hold long term, because you just might have to. 2, never sell at a loss. It defeats the whole purpose. And if you followed step number 1, never buy something you don't want to hold, well, number 2 should be self-evident. 3, make sure the company has consistent dividend increases. It's kind of cheating. I don't have to look at the quarterly reports or annual reports. If they're profitable, they're going to show the profits. It's that simple. 4 is weekly options. The reason why Intel, okay, we'll take a look at Intel. Hold on a second. INTC. The reason why I want weekly options is because I want a weekly cash flow. It's actually that simple. Now, I always tell people, stop making it more complicated than it needs to be. It doesn't need to be complicated. Where do you think their bottom will be? Ransom, I honestly have no clue. I don't. It's going to keep dropping until it finds bottom. Because it's you and me. Okay? You and me, we make up this crap right here. The high, the low. Because we decide, oh, that's way too low for this company. I'm going to jump in and buy some. Well, great. You jump in and buy it, and all of a sudden it goes up, 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 up. At a certain point, okay, I'm going to say, hey, I want those profits. I'm out of the game. I'll take a step back, take my profits, and go play somewhere else. Okay? I day swing trade options, which can be stressful. I like your style, though. Well, Dustbuster, I appreciate that. Now, to be honest with you, I used to sit in front of the computer and looking at a whole bunch of different stuff. Oh, which one's moving? Which one's moving? Which one's moving? Which one? Yeah, no, thank you. I don't do that anymore. Okay, I got a simple strategy. It works effectively. I get 50% per year. Why would I want to change? You're Warren Buffett type. Well, don't get me wrong. It's mechanical. All right. Yeah, well, yeah, you do this, this, and this, and it's all good to go. ENB has been doing dividends for more than 20 years. If you get a chance, let me know. ENB. I think I've heard of ENB. Okay, ENB. That's a monthly, dude. That's going to be a no. And it's at a high of the year. Because that's two no's. High of the year, yeah, no thanks. Monthly, yeah, no thanks. Because it just doesn't pay the same. And apparently you weren't listening. When I say I like weekly optionable stock, and the reason why I want weekly optionable stock, it's very challenging to figure out where's it going to be in the next 4 weeks. Well, right now she's at 38.45. That's the high of the year. Okay, well, where do you think it's going to be in 4 weeks? There's no support whatsoever to give you any indication that that thing should go up another 4 weeks. There's no basis. Because if it was worth more than $38, it would be higher than $38 right now. So it's very challenging to find out, in my humble opinion. Okay, that's just my humble opinion. Where's it going to be in the next 4 weeks? Well, who knows? But it's easy to judge where it's going to be in 5 days. Because right now, it looks like eventually it's going to find its top and then turn around and come back down. Because when you're buying down here at the bottom's at 35, the top right now is 38, that's a $3 move. $3 move doesn't sound like much, but it's a $30 stock, so that's a 10% move. 10%, it's like, hey, 10% in a couple of weeks? Fuck yeah, why not? Oops, I probably shouldn't have said that. Anyway, let's take a look at some more of these questions. So where do you find these companies? Ooh, Lily. Okay, where do I find these companies? I hope you got a pen and paper handy. Here it comes. You ready? Google. Funny, Google. Go to Google, in the search bar, Dividend Kings List 2024. 54 companies that have increased their dividends for more than 5 decades. Dividend Champions. I believe there's 150 of them. Increased for 25 years. Dividend Aristocrats List 2024. I think there's 67 Dividend Aristocrats. 25 years of increased dividends. And then you get the Dividend Contenders. Honestly, this is solid advice and I appreciate it. Ransom, way to go. And then last list, so you get five lists. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. So just go into the search bar, Warren Buffett Stock List 2024. It'll actually give you a PDF or an Excel spreadsheet with all the stocks and their current values and their dividend. It gives you a lot of information and it's free. Okay? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. Right there's about 300 companies that have consistently increased their dividends for more than 2 decades. So I hope that helped out there, Lily. Just Drew. Do you analyze charts or mainly care about dividend increases? Okay, Just Drew, excellent question. Okay, excellent question. Do I just analyze charts or do I actually care about the dividend increases? Well, it kind of flows. Okay, first thing, and this kind of like works right in charge with everything else. So let's go. All right. What we're looking at now is a dividend calendar. So let me quickly do a video on this. All right, so we have a dividend calendar here. Every one of these green dots represents a company that is going to be paying their dividends. Let me rattle off a few for you. Baxter, eBay, GLW, that Corning, KHE, Heinz Ketchup, Nucor Energy, Walgreens, Target, Aflac, ADM, Archer Daniels, KeyBank, Johnson & Johnson, UPS, Chevron, Apple, so on and so forth. You've probably heard of every single one of those companies. Now, when one of those companies, okay, gets ready to pay a dividend, that's what these green dots are. So if you want to collect a dividend, you have to buy it before these dates, and that's called the EX date. There's 4 dates to remember. Okay, one is the announcement date, self-explanatory. Second is the EX date. The EX date is the last day the stock trades before the dividend is paid out. If you want a dividend, you have to buy it before the EX date. Any day, 29th, 22nd, the 31st, the 1st, the 3rd, whatever. As long as you, hold on. As long as you own the stock before the date of record is date number 3. Now, date number 4 is the payment date. Well, it's all self-explanatory. Announcement date, payment date, EX date, date of record. Okay? The date of record and the EX date. How do you feel about HON? That's Honeywell, isn't it? I'm going to write it down. We'll take a look at it in a little bit. HON. We'll take a look at Honeywell in a little bit. All right, that being said, ENB is going to be a no. Terribly sorry. Somebody liked it and wanted to see it. CVX, Chevron. All right, sometimes you have a stock in play week after with quarterly divs. How does that work? Oh, Poseidon's last molar. Okay. I'm missing some of these questions. Sorry, guys. I'm missing some of the questions, so I have to go backwards. All right, UNH. I have no idea what UNH is. Oh, I missed quite a bit of these questions. So where do you find these companies? I remember that question. Do you analyze charts? I remember that question. Disney, Dutchie, we already looked at Disney. We found that Disney, we're going to keep our eye on it in the next couple of weeks because she hasn't found the bottom yet. Okay, we've every time we find a halfway decent company, we want to keep our eye on it. So we want to see where the actual bottom is. When the actual bottom is, that's where I like to jump in. Because if you look at a chart, take a look at this one right here. This one is ENB, not something I would trade, but it's basically a regular stock chart. Okay, goes down, up, down, up, down, up, down, up, down, up, blah, blah, blah. That looks a little bit intimidating like that. That's a 1 year. Well, the 90-day chart looks like this. Same thing. Okay, up, down, up, down, up, down, up, down, up, down, up, down. Same thing. High, low, where was it, where is it, what direction is it going? It's all relatively simple. Then you want to jump into the last 30 days. The last 30 days gives you an idea of where it's going. Well, look where it is. It's right here and it's shooting on up. Great if you're one of those people that likes to buy at the high and wait for it to go higher. I don't do that. Because eventually she's going to come down and then turn around and go back up again. Okay? She comes down, goes up, comes down. That's all stocks do. They go up, they go down, they go up, they go down. That's all. Or you buy it continue to go down. No. I don't like buying when it's going down. Monthly, la 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 la. UHN. What the heck is UHN? University of New Hampshire? UHN. No, that wouldn't be University of Hampshire. No, UNH. Sorry. UNH. Silly me. 21 more questions. Holy cow. How diverse is your weekly portfolio? Carlo. Charlo? Is it Carlo or Charlo? Taking a look at my list. Alright. Take a look at the list that I got. Now, I have like 7 or 8 lists. Each one represents something different. Okay? Now, we're looking at the monthly calendar for August. Now, we're currently in August 7th, which is right here. So what stocks are having their dividends this week? Citigroup, Eaton, LVS, Las Vegas Sands, Metropolitan, NEP. Oh, hell, what's NEP? Next Tier Energy Partners, silly me. Ford, Intel, KBH, KB Homes, British Petroleum, IBM, Siri, Visa, Wells Fargo. That's just this week right here. Now you have to, alright, if you told me, I wouldn't believe you that out of these 5, 10, 13, what was that, 14 stocks? 10, 13 stocks, that you couldn't find one decent one. Or 2 decent ones. Ford, Intel, British Petroleum, IBM, Siri, Visa, Wells Fargo. Come on, you know all these companies. Those are the only ones I look at for the week. So, as the weeks pass, right, next week I'm looking at these. Alcoa, Apple, Capital One Finance, ConocoPhillips, US Steel, Eli Lilly, Microsoft, ExxonMobil, so on and so forth. And that's all I'm going to look at next week. I'm not going to look at anything else. Okay, I'm not going to look at CMI or KGC or Baxter or DuPont. I'm not looking at those because they're not up for consideration. What do I consider up for consideration? Well, where's the green dots? That's what I'm looking for because each one of these green dots is the EX date. Now, 2 weeks before the EX date, most of the time companies go increase in value. That's why I look at the calendar. I look at the calendar. Okay, this week, good. These are the ones I want to look at. That's it, and that's it only. Because if the stock's going to move up, I want to jump in, buy it at that current price, sell somebody the rights at that exact same price I just paid for it. Imagine that. You buy a stock for $100, you sell it for $100, and you still get 1%. Well, 1% a week is over 50% per year. And it's really not that difficult. So, I don't know if it's Carlo or Charlo, but that's basically what my weekly portfolio looks like. It changes every week. But the funny thing is, okay, there's 4 quarters in a year. 4 quarters. January, February, March, first quarter. April, May, June, second quarter. July, August, September, third quarter. October, November, December, fourth quarter. Each quarter looks the exact same. Each quarter has 13 weeks. 13 weeks. There's 52 weeks in a year. There's 13 weeks in a quarter. Okay, so week number 1 for the first quarter looks the exact same as week number 1 for, let me show you really quickly. Okay, August. Let's fire a simpler list. Let's use Warren Buffett's list. Now, July, come on, where are you? Okay. This is July. July is the first month of the third quarter. So look at the stocks we have. American Express, Bristol Myers Squibb, Globe Life, MasterCard, Verizon, AbbVie, Procter & Gamble, Bank Mellon, Ally, Aon, and DHI. Okay, that's the first week, second week, third week, fourth week, fifth week of the quarter. But that's the first month of the quarter. Let's go back. April. April's the first month of the second quarter. American Express, Bristol Myers Squibb, Globe Life, AbbVie, Visa, MasterCard, Ally, Aon, DHI, Bank Mellon, Procter & Gamble. That's the exact same as it was in July. Okay, July is the exact same as April. So let's go to January. So January 2024. Oh, look. American Express, Bristol Myers Squibb, Globe Life, AbbVie, Bank Mellon, Procter & Gamble, Verizon. It's the exact same list. Okay, that shows you how boring it is. Exact same list, quarter after quarter after quarter. There's 13 weeks. Okay, I believe we're on week number 6 for the quarter. Is that correct? So week number 6. So next week is week number 7, and then week number 8, and then those are the only stocks I look at. What is up for consideration for that week? I jump in on Monday, pick up 4 or 5 stocks, that's it. Then I'm out by Friday. Great. I jumped in on Monday, make my money, and I'm out on Friday. Most of the time. Not always. Every once in a while I'll carry something longer than I wanted to. At this time, at this moment of the year, and that would be AEO and WIN. So I've had AEO since April, and I had WIN since May. Hello, James. Good evening from Puerto Rico. ¿Qué pasa, amigo? ¿Cómo está? Thoughts on GSAT? GSAT? Never heard of them. GSAT. All right, so GSAT. All right, Lily. Glad you're okay. All right, look. I heard of Dividend Aristocrats. Well, cool. See, you're halfway there. And Bon Jovi. Yeah, I'm halfway. All right. Sometimes you have the same stocks in play week after week, which quarterly divisions does not work. Well, you're absolutely correct. You're 100% correct. So let me give you a quick explanation for that. Are you ready? Because it just works. It pays. Okay, so if you take a look, you know what? We haven't done this in a while, so let's actually go back and take a gander at it. So we're going to go over to my website, The 10-Minute Trader, and we're actually going to look at current trades for 2024. Okay, actually give you my trades for the year. Now I have to apologize because I don't have week number 30 or week number 31 posted already. All right. That's all. In case you were wondering, all those little dots right there are my social media. YouTube, Twitter, Facebook, Instagram, podcast, blah, 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 all those. All right. Now, if we come down a little bit further, these are all... Let's do this video on this one. We'll like that one somewhere in the future. Come on. Right there. Right there. All right, here we go. So now we're looking at all the trades I've done so far for 2024. There's week 29, week 28, 27, 26. All the way down to week number 1. Where is it? Okay, right here. Week number 1, the first quarter of the year. It tells you right there. Macy's, General Motors, Ford, CVS. So week number 1, I had Macy's. Week number 2, Macy's again. Week number 3, Macy's again. Week number 4, Macy's again. Week 5, Macy's. Week 6, Macy's. Week 7, Macy's. Week 8, Macy's. Week 9, Macy's. 3M also. So I carried 3M for 11 weeks this year. Now, I didn't carry Macy's. Macy's I bought, made a nice profit off of, sold. Bought, made a nice profit, sold. Bought, made a nice profit, sold. Consistently. If we take a look at the chart on Macy's, look at this space right here, from here to there. Okay? This is what you call channeling. It stayed between 18 and 1950 for 7 months, 7 or 8 months. Yeah, wonderful. So you buy it here, sell it here. Buy, sell, buy, sell, buy, sell, buy, sell, buy, buy, sell, so on and so forth. And that's exactly what we did since the beginning of January. And I like Macy's. Macy's is actually up for consideration this coming week. Here's where we are right now for the last 30 days on Macy's. Okay? The video. So we're looking at Macy's for the last 30 days. 1950, she drops down all the way to 1450. That's a $5 drop. A $5 drop on a $20 stock is 25%. Okay, Macy's has been in business for over 100 years. They've got name recognition like no other clothing store or whatever the kind of store they are. All right? Now, 30-day bottom, Monday. Tuesday, up. Wednesday, up. Well, that's my invitation. I don't know what you guys got to figure out. How do you identify the bottom when you're buying? Because when you make money in the stock market, you buy low and sell high. Well, You're not going to get any lower than the 30-day bottom. Now, am I buying it to hold on to it for a long period of time? Hell no. I'm buying it. Look, we got 3 gap downs, 1 gap down, 2 gap down, 3 gap downs in the last 30 days. Gaps have a tendency to fill. Okay, Monday's gap already filled. Okay, last week's gap, that's up next for the list. So when you're taking a look at a chart, deciding whether or not you want to buy, well, where the hell is it? Well, 30 days ago was a 30-day high. Monday was a 30-day bottom. You're going to buy low, sell high to make your money in the stock market. Buy low, sell high. Well, the high was 30 days ago. Well, what happens after a 30-day high? Well, I like to call it profit taking. Because if I see a stock go up 5 or 10%, I'm going to take my profits and jump. But I'm only looking for a 1% profit per week, so it's easy to hit 1% per week. Look where we are now. We're at a 30-day bottom Monday. 1 day up, 2 day up. You got to figure out, where do you call the bottom? Right. So, Poseidon's last molar, we'll take a look at that in a little bit. So after that, I want to figure out what am I getting paid. $15.39 to $15.50 is going for 27 cents. That's close to 2%. And you ask, well, why do I do Macy's all the time? Well, because it's giving me close to 2% every week. So you got a 100-year-old company that has name recognition like no other company that you know of, and consistently giving me 2% every single week. So why wouldn't I continue trading it? Now, just because the dividend's not coming up and the numbers work, yeah, I'll buy it. Okay, they increase their dividends consistently. I'm not 100% sure what they're doing lately, but I cut them some slack because they're over 100 years old and the name recognition is huge. I missed some of these questions. Did the crash affect your method at all? So, King, I've been hearing that question for the past couple of days. I'm not seeing any crash whatsoever. My main goal is a safe, predictable, consistent 1% per week. If you're asking me, did I make my 1% this week? My answer would be, yes, I did. Did I make my 1% last week? My answer would be, yes, I did. Do I see myself making 1% next week? Yes, I do. Because once you understand, the money doesn't disappear. The money just goes from one person to another person. It doesn't just disappear. So when the stock drops, who do you think gets it? Somebody gets it. It goes from someone to someone else. It doesn't just automatically vanish. All right, let's take up some more questions. Lots of red there. Well, yeah, but you can't get to a bottom until you have a red. Okay, now I could change it and change it to the Heiken Ashi. Hold on. Yep, Heiken Ashi, a lot of red. I don't really like that one. It's kind of misleading. Anyway, so let's see if we have any more questions. Apple. Ooh, yes. Is Apple on our list? Yeah, I got like 5 more stocks go before I get to Apple. All right, Vegas. So Apple is on my list to take a look at. Next, we're looking at MSTR. MSTR. Who the heck is MSTR? MSTR. MicroStrategy. Really? Yeah. So I'm going to say no to MSTR only because I'm not quite sure what you guys think of me. If you think I can buy 1,000 shares of a stock that's $1,200, yeah, you got the wrong guy. Okay? I'm not. I cut it off at $250. That's my limit. Okay, I'm still just a small fish. All right, I don't have millions upon millions, and yet $1,200 stocks not on my list. So MSTR, DTR. What the heck is DTR? DART. We can't find it. Okay, so DTR is non-existent. CCL, Carnival Cruise Line. Interesting. All right, take a look. First thing I always want to look at. First thing I always want to look at is the high, the low, where was it, where is it, what direction is it going? BHA. Never heard of BHA. BHA. Alright, so we'll take a gander at that one. So, Carnival Cruise Line. If I bought it tomorrow morning, $13.98, the 14s are going for $51. That's a nice return. Think about it. If I'm buying it for $13.98 and the 14s are going for $51, what kind of return is that, Claire? 51 divided by 13.98. That comes a grand total of 3.6%. But here's the catch, the 3.6%. If you like Carnival Cruise Line at this price, that's what it is. So let's take a look a little bit closer. Hold on, draft chart. There we go. Okay, so now I want to look at the chart. The high was 1978. That was end of December. The bottom was 1088. So that's almost a 50% difference. The bottom being 1090 and the top being 1985. Well, that's a big difference. That's almost 100% increase. You see that? Let's close up a little bit closer. Here we go. 1023, okay, October, 1084, and then 12. That's 2 months. 100% increase in 2 months. That's awesome. Okay, Carnival Cruise Lines. Let's say the last 30 days. Let's take a gander. What are we looking at for the last 30 days? Well, 30 days ago, we're at 1751. Come on. So 30 days ago, 1751, tops off at 1947, drops down to 14. Now from 19 to 14, that's a $5 drop. That's a 25% decrease. Well, Monday was your bottom right here. Tuesday was up. Today was kind of a down day, but it's still higher than the 30-day bottom. That's going to be a tough one to explain. Okay? Now, I love a 30-day bottom coming off of a 30-day top, especially when it's a 25% decrease. So she decreases in price 25% in 2 weeks. All right? Now she's here, 8.5. That was Monday. Tuesday was an update. Today was a little bit of a pullback. But today she opened up higher, so it's 2 days to the upside. Oh, great. That could be an invitation to jump in. Now, it's paying a very nice premium, but let's check and see how many dividends they pay. And for that, we go to Yahoo Finance. Now, over at Yahoo Finance, we're going to look up CCL, Carnival Cruise Lines. Go to historical data, because I want to find out what they've been doing. So I want to look at dividends only, and they have no dividends at all. So why are we looking at Carnival Cruise Lines? They don't have any dividends. The chart looked good. Okay, what else looked good? Well, the premiums look good. But what happens if the stock goes down? You don't collect anything. Okay, so the worst case scenario, and don't kid yourself because it could happen. Okay, there's a crash, recession, or whatever, pullback, whatever you want to call it, every decade. Well, we had one at the beginning of the decade, in 2021, with the pandemic. BAH pays dividends. Okay, you know what? BAH. I never heard of them. BAH. Booz Allen Hamilton. Yeah, sorry. BAH is going to be a no. Reason why? It's a monthly optional stock, which means I can only do it once a month. Once a month doesn't work for me because it just doesn't generate enough money. Okay, I'm looking for a safe, predictable, consistent 1% per week. I can't do that with a monthly. Because at 145, the 145 is going for 230. Well, that's for 2 weeks. And that's not even 1% per week. You got it, Ransom? Okay? Then after that, if I'm incorrect, all right, I have got to wait another 4 weeks. In 4 weeks, I do, thank you, okay. 4 weeks, what is that one paying? the 150. Well, the 150 is paying 280. Okay? Now, that's a little over, it's not quite 2%, but I've got to carry it for 4 weeks. 4 weeks for not 2%? Okay, so 2% is for the month. That's a 0.5% per year. 2% a month is going to give me what? 24% per year? Unfortunately, I can't live off of 24%. Okay, I live off of 50%. It sounds a little weird, but I could go back to work. I'm healthy enough to go back to work. I'm smart enough to go back to work. But I've been working since I was 13. My very first job, I was 13 years old, worked at Old Man Simmons Farms. Okay, it was, something to do. Me and my buddy lived three houses down. Okay, 3 houses down. Me and him was our first job. No, that makes sense, and is legit appreciated. Alrighty, Ransom, good for you. All right, next question. LMT, Lockheed Martin. Okay, I like Lockheed Martin, and it is on my personal list, and it's going to be a no. Couple of reasons. Okay. I should say not today, not this week. Okay, I could say not anytime soon. Reason being, it's $500. Now it is on my list. Okay, so eventually at some point I will get to the point where I can buy 1,000 shares at $500 a piece, but not today. Okay, the reason why it's no is at the high of the year, and it's over 250. I got to draw the line somewhere. Okay, however much money you think I got, I don't. I cannot afford 1,000 shares at $500 a share. Because when I buy them, I like to buy 1,000 at a time. I could buy 200 or 300, but it is what it is. All right, so Lockheed Martin, even though I like the company, even though it is on my list, it's a no this week because it's just out of my price range. All right. NRE. Oh, Nike. NKE. I thought it was an R. Nike. Now, I do have some Nike, just to let you know. Now, I saw this drop a couple of weeks ago, and I said, oh, hell yeah, I'm jumping on that one. The reason being is, well, I like Nike. I'm going to take a quick look at Nike. Nike at this moment in time is $72.30. So 72 is going for $1.83. You take that 30 cents off there, and you're still walking away with $1.50, which is almost 2%. So if I buy Nike at $72.30, sell someone the rights to buy it from me at $72, which is less than what I paid for it, you're telling me I can still make 2% and walk away with the week? All the stock has to do is basically nothing. Look at it. It's $72.30. Okay, the closest strike price is the 72, and the 72 is paying $1.83. Well, I'm losing 30 cents right at the top, so you take the 30 cents off the 183. So I'm walking away with 153, right? So if I'm walking away with 153, that's my profit per share. Now, some people say $1.53, that's not a lot. Well, I'm not looking for a lot. When calculating the profit and loss, you take what your profit is. In this instance, it's 183, subtracted 30, so I'm walking away with 153. So 153 is my profit. Now I divide that by the purchase price. The purchase price is 172. Well, why not 172.30? Well, because I already subtracted that 30 cents. Okay, so I took the 30 cents out of the equation when I subtracted it from the 183. All right, so I'm divided by the 72. My profit is going to be 2.12%. That's 2 1/8. 2 1/8%. Okay? Now, what does the stock need to do? Well, if it stays exactly where it is, I make my money. If the stock goes up, I make my money. The stock can even come down. So that's 3 for 3. There's only 3 directions it's going. It's going up, it's going down, or it's going, I hate saying sideways. How about nowhere? Going nowhere, up or down, and I'm still making the money that I'm looking for. That's what I like. 3 things going my direction. All right. So the numbers work great. Now let's look at the chart. Hold on a second. There we go. Okay, so the numbers were great up over here, so it's over 2%. Great. What do I look now? High, low, where was it? Where is it? What direction is it going? Well, a year ago, Nike's sitting at 110, tops off in December at 123, drops around 70 bucks in July. Well, last 30 days, or these last 60 days, the high at 197, bottom at 70.87. All right, after that big drop, here we are now. Here's the last 30 days. 30 days ago was the 30-day high, and that was 75.49. From the 75.49, she drops, retrace, drops, retrace, drops. Here's our 30-day bottom on Monday. Monday's a 30-day bottom. Up, up. That's my invitation right there. 2 days to the upside. That isolates the bottom for me. You've got to figure out what makes the bottom for you. So if you look at the last 30 days, look at the movement. Okay? Down, up, down, up, down, up, down, up, down. Now it's going to the upside. It's like a seesaw. Remember on the playgrounds as a kid? Up, down, up, down, up, down. It's a seesaw, teeter-totter, whatever you want to call it. Do you think Dell will go back up? Ooh, Marathon Mom wants to take a look at Dell. I actually own some Dell, so we'll write that down. We'll take a look at that one. Ford. All right, we're going to go look at Apple. Apple, we've got a couple more to go. All right, SVIX. That's probably going to be a no. SVIX. Whoa, imagine that. Okay. Now this is an ETF. It has weekly options. All right, so let's see what the dividends look like. SVIX. Now I'm not too fond of ETFs. No dividends at this selected time period. So why are we looking at it? SVIX is a no. CGC. 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 Oh, Canopy Growth Corporation. Okay, well let's put CGC in here. I've never heard of it. CGC. Again, no dividends. Now, when I ask you guys politely to only send me stocks that have increased dividends, well, first they got to have a dividend. HON and Visa. HON is on the list. We got a ways to go. I don't think we'll get to it tonight. Well, you might get to it tonight. It's not that far down on the list. Hess. Now, when I tell you guys I like 20 years of increased dividends, well, it's got to at least have dividends. If it has no dividends, why are we looking at it? Okay, now, I know you guys like some of the stuff, and you want to take a look at certain things because you like them for some strange reason, but I'm not quite sure our thought process is on the same level. Now, you might be looking for capital appreciation. I don't care about capital appreciation. I really don't. I care about the safety, predictability, and the consistency of my profits. Now, if I can get 1% every single week, well, that's what I'm looking for. Whether I can get them through the dividends, the premiums, or the capital appreciation. I'll take either one of the three, as long as it's consistent and predictable. All right. So CGC. I'm going to go right to. There's no dividends, so CGC is a no. Home Depot. Oh, check it out. Home Depot and then Apple. Okay. Home Depot is usually a no. Now, the reason why Home Depot is usually a no is it's out of my price range for one. And the premiums usually aren't that great. Uh-oh. I missed the question. I'm going to go over here for a second. Oh, I like 1% a week and predictability. Well, all right then, Ransom, you could be in the right place. Okay, Harry, we're going to get there. So, HD, Home Depot. Well, right now it's at $342. A little bit out of my price range. And if I'm going to buy it first thing tomorrow morning, 340 is what I can expect to pay, and the 340s are going for 1350. Can you imagine that? 1350. No, that's not what I want. I want that. All right. So we're looking at Home Depot. A year ago, 329, bottomed out in October at 274, topped out at 395, and that was in the end of March. Okay. Here's where we're sitting today. 30 days ago, check it out. 30 days ago, 30-day bottom. Now, remember I tell you what 30-day bottoms? 30-day bottoms, 331, that was on July 5th. She shoots on up, hits 375. So from 330 to 375, that's a nice jump. Pulls back, goes back up, back down. Now, we're looking at Home Depot to come back down again. Well, not the greatest time in the world to buy, because if it goes up and comes back down, well, she's in the middle of coming back down. So she's probably going to come down to 335 or somewhere in this area before she turns around again. So if I like Home Depot, I'm going to take a look at it next week to see where it's bouncing off of, because we got our 30-day top. So what I'm looking for, I would pause on Home Depot until it actually finds the bottom and turns around. Because eventually, it may be this week, it may be next week. Eventually, it is going to find a bottom, turn around, go back up. Because that's all Home Depot does. It goes up, it goes down, it goes up, it goes down. Right, next on the list is Apple. Now, a couple of people have been looking for Apple. Vegas, here it comes. AAPL, Apple. Interesting. First thing I want to see, high and low was, is, and direction. Cool. Now, what are the numbers paying? I want to take a look at that. I'll get this video rolling. There we go. Now we're taking a look at Apple. At this current moment, 208.25. The 207s are going for 509. Well, that's more than 1%. The 210s, 440. Again, way more than 1%. Actually, it's more than 2%. So if you like Apple, you can get almost 2% from Apple. Let's take a look at the chart and see what's happening. A year ago, 179, bottomed out in April. That's probably right around where that lawsuit was that they had to pay. I think it was in Europe. Okay. Look at the recent high on the 15th of July, 237. From there, she drops down a little bit of a gap down. You guys know I love gap downs because it's going to fill eventually. 30-day bottom right here on Monday, Tuesday up, Wednesday up, and you got a gap down right here from Friday to Monday. Well, of course this is going to fill. Better than that, take a look at the seasonality chart. The seasonality chart has it going up consistently. Okay, now the seasonality chart for Apple, okay, seasonality, okay, far left, January, December, the blue line represents the movement of this year, the red line, the whole year, from January to December, over the last 10 years, that's a 10-year moving average, okay, from January to December, straight up, not straight up, but continuously up, okay. So, if I'm looking at Apple, I can get over 2% for the next couple of days. Well, that works for me, because look where she is. 30-day high, 30 days ago. 30-day bottom, Monday, Tuesday, Wednesday, the upside. That's 2 days the upside. That's how I identify a bottom. You're going to make your money buying low, selling high. Well, Apple is at a 30-day bottom. You don't get any lower than a 30-day bottom. Well, you can go for a 90-day bottom or a year bottom, but that's not what we're looking for. We're looking for where is this going to go by Friday. Not this Friday, but next Friday. So if she's here now, the 30-day top's there, 30-day bottom's here, where do you think she's going to go by next Friday? That's only 5 or 6 days. Well, I don't care where it goes, just as long as it keeps going in that direction. Because I want to jump in. Hold on. Get this video up and running. Tell me something good. All right. I want to jump into Apple, okay, tomorrow morning at 208.25. See it up there, 208.25? And I sell the 110s, I can bring in 440. Okay, that's over 2%. If the stock goes up, yeah, I make a little bit more. Well, what does stock usually do this time of year? Well, Apple has a tendency to go up all year long. Tendency to go up all year long. Why wouldn't I buy Apple? Now, I'm not buying Apple to buy and hold for a long period of time. I want to jump in. Okay, if I jump in at 208, I can sell the 210s, make more than 2%, or I can sell the 207. The 207s is probably a better, a safer bet. Because if I buy it at 207.50, well, I'm losing 75 cents. But if you take 75 cents off of the 590, well, you're still making 520, is that right? 515. Yeah, so you make it 515, which is more than 2% on Apple. And what's it going to do? Well, it's just going to stay above 207. Well, it's currently at 208. 208 and going to the upside. It's kind of like a no-brainer, but I can't tell you what to do. You have to decide for yourself. Do you like Apple? Do you like Apple at 208? Okay, remember rule number 1. Never buy something you do not want to hold long term. Because you just might have to. Alright, so ask yourself the question. Do I like Apple? Do I like Apple? And do I like Apple at 208.25? Great. If I sell the 207s, the strike price, and the covered call, I'm making more than 2%, and the stock doesn't have to do anything. If it goes up, I make my money. If it stays the exact same, doesn't move at all, I make my money. The stock can even come down a little bit, and I'm still going to make my money. You want to see how we do the trade really quick? Let's do this. Let's get out of here. Let's change this to covered call. And remember, we said we like the 207s. We hit the 207 right here. Okay, now this is already preset for 1,000 shares and 10 contracts. Okay, this is what the order looks like. Buy 10 covered AAPL 100s. Those are the weeklies. 16 August 24th. That's next Friday. The 207.50 call option to open. Well, that's my 2%. Okay. So let's do some calculations. Let's do some calculations. All right, get my calculator. The profit off of this trade, clear that, $5,220. That's the profit. It says it right there in the order. Remember I said consistent and predictable? Well, every time I do a covered call, it tells me exactly what I'm going to make. Now I'm going to put the numbers into the calculator and tell you exactly what my rate of return is for the week. Now, this one is going to give me two different numbers. One is going to be the cash number, and one is going to be the margin number. So if it's an all-cash account, I'm using this number. If it's a margin account, I'm using that number. Huge difference between the two. So you better be right if you're thinking about using margin money. So 5,200 is my profit divided by what I'm paying. 202, 286. That comes to a grand total of 2.58% for the week. That's on a cash account. You can basically double that if it's a margin account. That's over 5% if you're on margin. Now, here's the challenge with the margin account. It's borrowed money. Now, I do have a margin account. Me personally, I have no problem whatsoever paying 8% per year to borrow the money. Because I'm making over 50% a year on the 8% money that I borrowed, so my profit is 42%. I'm okay with that. But do not do a margin account until you understand what the risks are. And there are quite a bit of risks when you're using margin money because you're borrowing someone else's money to trade with. Trading is risky enough as it is. Look at that, I've done all my questions. Cool beans, that usually never happens. Alright, so that was Apple. Next we're going to look at ENB. Somebody want to take a look at ENB? Alrighty, let's take a look at ENB. I have no idea who they are. Alright, let's get out of that. Let's get out of that. Let's get out of this. Let's get out of this. And let's get back to that. Now we're almost back to normal. There we go. We got ENB, yeah. ENB. I have no idea what ENB is. XOP What the heck is XOP? XOP. Now, somebody want to look at Carvana? Yeah, Carvana's a no. Okay, they haven't even been around for 20 years. So how can they possibly have 20 years of increased dividends? Solana, you're going to have to give me the ticker symbol, because if I don't trade it consistently, I don't know what they are. XRP, isn't that cryptocurrency? Yeah, I don't do cryptocurrency. Okay, where was I? ENB. Okay, so let's go look at ENB. ENB, you say? ENB. Alright. ENB. Enbridge. Enbridge is going to be a no. Now, for a couple of reasons. Reason number one, let me quickly show you why ENB is a no for me particularly. It may be okay for you, but it's a no for me. Reason number one, it's a monthly optional stock. I can only write a covered call on a monthly optional stock once a month. That's only 12 times a year. What am I making? 25%? Yeah, it doesn't work for me. Reason number two, it's at its current high of the year. Well, that's automatically no. Okay? Now, if a company doesn't have consistent increase in their dividends, that's one thing. But if I can't make money on a weekly basis, especially with monthly optional stocks, I can't. It's a no. It just doesn't work for me. Can we check out Caterpillar? I like Caterpillar. C-A-T. I can spell cat. C-A-T. I can spell hat. H-A-D, but I can't spell hippopotamus. No options on hat. Okay, cat. Why was I saying hat? Caterpillar. Love Caterpillar. Caterpillar's on my list, but it's just a little pricey for me. ET, Energy Transfer. Ooh, Energy Transfer. Somebody always wants to look at Energy Transfer. ET is going to be, we'll take a look at it, Shop. Isn't that, Shop? Well, I can tell you right now, Shop's a no, because I looked at it before, okay? Doesn't meet the parameters. Think about it. If you're investing your money into a company, now this is your hard-earned money. I've been working since I was 13. I'm 60 years old. That's a long time. Yeah, Shopify is going to be a no. Chevron is a yes, because I love Chevron. The reason why Shopify is a no, they haven't been in business for 20 years. How can they possibly have 20 years of increased dividends? Now, the reason why I look for 20 years of increased dividends is because it shows me that the company is consistently profitable. Now, believe it or not, there's over 300 companies. Let's do this. Hold on a second. Now, there's over 300 companies that have consistently increased their dividends for more than 20 consecutive years. Well, what does that mean? Well, 2014, 15, 16, 17, 18, all the way up to this year, consistently increasing year after year after year. It's your money. You can invest it anywhere you want. I choose the top 300 companies. And the way I isolate them is 20 years or more of increased dividends. That means I know they're profitable and consistently profitable. Not a year or two or three, but 20 years consecutively. If they're making money every single year and they're more and more profitable every single year, why wouldn't I? How did this get open here?
I'm not sure. I didn't want to chime in and butt you, so I don't know.
You know what? I tried calling you 3 times, dude. 3 times. It's like,
I'm on vacation in Sturgis.
Oh, in Sturgis. What are you riding?
The 2019 Electric Glide Ultra Classic.
Cool beans. I traded in my Harley Davidson for Goldwing.
Yep, we had that conversation the other night.
You know, don't get me wrong. I like the Harley. It's got a certain look, you got a certain feel when you're driving it. But when you're driving it 2, 3, 4 hours, it hurts your back. Well, it hurt my back. That's why I got rid of my Harley.
Yes, sir.
And a 6-cylinder is a lot smoother than those 2s.
Well, and you get reverse.
Yes, and that was a selling point for me. You kidding me? Hit this button and going backwards? Come on, I'm a small guy, 160 pounds. Can you imagine? Now, I've dropped my Goldwing a bunch of times, okay? Lifting it up ain't the easiest thing in the world.
Yeah,
Yeah, dude, I'm half your size, man. There's nothing wrong with that at all, you know. But yeah, I like the reverse.
I'm assuming you sent me the invite accidentally. I just figured I'd stay quiet.
Yeah, okay. All right, I'm going to disconnect. Hey, great chatting with you. I hope you're having fun in Sturgis. You should send some pictures.
Absolutely, and if you don't mind, I'll give you a call when I get back.
Yeah, that's fine. You have to leave a. You're going to have to leave a message because I do have a spam alert on my phone, and if people just don't get through. You got to leave a message, and I'll call you back. All right.
Does texting work better?
Texting does work better.
All right, I'll shoot you a text.
All right, you have a great time while you're out there, man. Stay safe.
You too.
All right, well, that's interesting. I didn't mean to do that. It just so happens when I'm scrolling through. Anyway, besides the point. Where were? Oh, Caterpillar. All right, well, let's continue to take a look at Caterpillar. All right, so we're taking a look at Caterpillar, even though it's out of my price range, because I like to stay at 250 or below. Right now, it's at 325, and the 325s are going for 755 a share. Well, that's over 2%. I like 2%. I like Caterpillar, and you cannot possibly tell me and convince me you've never heard of Caterpillar. Those big, huge yellow bulldozers and whatnot on the side of the road. Yeah. All right. A year ago, it was sitting at 280. The bottomed out and end of October at 225. Topped out at 381, and that was the end of March. From there, look where we are. 30 days ago. Now, I love my 30-day chart. I do. Because it tells me where was it 30 days ago? Where's the high? Way up there, 370. The bottom's down here at 305. 370 to 305. That's a big drop. Well, of course there's going to be a bottom and then going to the upside. Hold on a second. So we isolated the 30-day bottom. That was on Monday. Okay, Monday's a 30-day bottom. Tuesday was up. Today was up. What other kind of... You guys are going to have to figure out. Okay, making money in the stock market. You buy low, you sell high. Get your 30-day bottom on Caterpillar here. Okay, you have to figure out where do you call bottom. Okay, over here, take a look. Bottom, 2 days up. That's where I call bottom. 2 days. But it kept going. Over here, there's the bottom, 1 day up. Didn't make 2 days up. Okay, they kept coming down. Okay, now we're here, 2 days up. This is where I call bottom, right here. 2 days to the upside from a 30-day bottom. So you got 30-day top, 30-day bottom. She comes down, bounces up. That's going to the upside. Okay, now, if I'm looking at it, the 325s, well, the 325s are going for 755. That's way over 2%. 2% a week is better than 1. But it is what it is. You have to figure out what you want. And then comes that very important question. Do I like Caterpillar? Do I like Caterpillar at this current price? Then it's a decision only you can make. I can't make that decision for you. Nobody can make that decision for you. You got to take the leap in saying, hey, this is my money. I trust this company. Caterpillar, I believe, is, well, it has increased its dividends for over 20 years. So great, I like Caterpillar. Okay, but you have to ask the question, do I like it at this price at this moment in time? That's the question you need to ask. All right, next on the list, Oracle. I like Oracle. ORCL. Okay, so here we are with Oracle. Same thing. We ask ourselves certain questions. Question number one always is, how much am I paying for it? How much can I sell it for? And what kind of rate of return am I getting? So 125.41, the 125s are going for 340. That's more than 2%. Where is this 2% coming from? It's like the fourth or fifth company we looked at tonight that's giving over 2%. Well, what do I want to look at? Where's the high, the low, where was it, where is it, what direction is it going? Is this a good time to jump in? Well, let's take a look. The last 30 days, right here. Okay, take a look. 30 days ago, we're at 146. Comes down, shoots back up, tops out at 147. Okay, 147. Up, down, and ended up here. Today is the 30-day bottom. Now, I don't like 30-day bottoms when they're all by themselves. I like 2 days the upside. This is going to make me want to take a look tomorrow, the next day, and the next day. Because we are... Now, as I was saying, we already know that Oracle is giving us 2%. We're just going to find out where the bottom is. Okay? Now, today is a 30-day bottom. Tomorrow, it may be lower, it may be higher. If it's lower, well, that's the new 30-day bottom. If it's higher, well, then today could possibly be. I personally like 2 days to the upside. So I'm waiting to see what happens Monday and then what happens Tuesday. Now, you ask yourself, do I like Oracle? Do I like Oracle at this current price? Am I willing to buy it? Am I willing to buy it and hold on to it until it hits my target? What's my target? Well, this week, my target would be 125.41. If I sell the 125s, I'm collecting this. Look at the size of the premium. It's huge. It's $3.40 a share. $3.40 a share. It doesn't sound like a lot. But when you buy 100 shares, it's $340. Once you buy 1,000 shares, well, that's $3,400. 10,000 shares, that's $34,000. You know, it goes up progressively. Now, don't feel bad if you don't have a whole bunch of money to jump, to buy 1,000 shares at once. So you're going to buy, 100, 200, 300, and then you move yourself up. It's like right now, my peak is $250 a share. I can't, personally, I can't go higher than $250 a share to make it profitable for me and to spread out the risk. Because you got to spread out the risk. Okay. Now, I usually have anywhere between 4 and 6 companies per account. So this account will have 4 or 5 companies. This account will have 4 or 5, and we'll go from there. So that being said, yeah, Shopify is going to be a no. That much I do know, because it's not quite old enough. It doesn't meet that criteria. Somebody just mentioned Amazon. Amazon's a definite no. Amazon's not a profitable company. You take a look at the financials on Amazon, that is a cash appreciating asset. You buy it and you hope it goes up. Well, they're not profitable and they don't pay dividends. You do the research. You should never blindly put your money in anywhere. Always find out, is it a good place to put my money? Now, certain things I question and certain things I don't question. So let's go back here for a second and back up a little bit. Market Watch, here we go. So we're back here at the Market Watch and we're looking at these stocks here. Okay, American Express, Bristol Myers Squibb, Globe Life, AbbVie, Bank Mellon, Procter & Gamble, Wells Fargo, Verizon, MasterCard, so on and so forth. These companies right here happen to be on Warren Buffett's list. Now, Warren Buffett's stock list, we all know who he is. Now, I never question anything on his list. So if his list pops up, yeah, I don't question it at all. But what I do question, I question the dividend aristocrats. Okay, so here's the dividend aristocrats. 25 years of increased dividends. Well, I'll take a look and make sure they are consistently increasing their dividends, because every year they balance out this list. So every year it's updated. So the list from 2022 is different than the list from 2023. So next year they might add some more. So I'm constantly updating my list. So this is dividend aristocrats. And then we'll take a look at the dividend kings. So once a stock has made it to one of my lists, I constantly keep an eye on it. Now I have a list right here called Old List. Now these are stocks I've been trading for quite a while, 5, 10, 15 years. Because it's the same list over and over again. If I see a company that consistently works and is profitable, well look, here's Oracle right here. Okay? Oracle, Cisco, AT&T, Verizon, MasterCard, Comcast, The Gap. You guys heard of all these companies. They're basically household names. I don't do that weird stuff. If I can't describe what a company does in a 30-second elevator pitch, well then I shouldn't be putting my money into it. I don't put my money into anything and nothing I don't already know and understand. Remember, rule number 1, never buy something you do not want to hold long term. Rule number 2, never sell at a loss. It just doesn't make sense. So make sure you're picking a good company. Okay, and only you can figure out what's right for you. I like the Dividend Kings. I like the Dividend Aristocrats. I like the Dividend Champions. Certain companies just, if it's consistently profitable, yeah, I want to take a look at it. It's actually that plain and simple. All right, so let's go back, take a look at a couple more. Let's get out of there. All right, next we want to take a look at Intel. Ooh, Intel. We were talking about Intel a while ago. INTC. Whoops. INTC. Alright, we're taking a quick look at Intel. First thing, always. High, low, what is direction? First thing I want to see. What's the chart telling me? Well, there's the high, the low, where was it, where is it, blah, blah, blah. Next, I want to go over to what am I paying for it? The last trade, the bid, the ask. The ask is what I'm paying for it tomorrow morning if I'm going to buy it. 1888, or the closest one is going to be the 19. The 19 is going for 63 cents. 63 cents. That's over 3%. 3% for Intel. But here's the question. Do I like Intel? Look where it is at the moment. Look at that big, huge drop. Right here. Big, huge drop. Now we're down here. 18.99. Do I like it at 19? Well, at 19, I'm getting close to 3%. Okay, 3% on Intel. But do I like it at this price? That's an important question. So if you like the company, well, which I do like Intel. Okay, let's take a look at the last 30 days. Okay, the last 30 days, here we are. 30 days ago, we opened up at 33.03. Okay, topped off at 37.16. Okay, and that was on the 17th. That was 3 weeks ago. Well, 3 weeks ago, she kind of slides down, and here's the big drop. She drops from 29 and goes all the way down to 20. That's a $9 drop on a $30 stock. That's almost a 30% drop. 30% drop, here's our 30-day bottom. I want to keep my eye on this thing, because if I'm getting 3% and it's here, you can't get any lower than a 30-day bottom. Well, here's the 30-day bottom right here. The only thing about this 30-day bottom, tomorrow it could be lower. Okay, I like 2 days to the upside once I find the bottom. This could be. Okay, it might be, it might not be. So we'll find out tomorrow if this thing goes up or not. I like 2 days. So looking at Friday and Monday, then she might be a good time to jump in. I don't know, but we'll keep our eye on it. And I'm actually going to write it down for next week. Now, what are we looking at? Intel. Oh, it's already written down. So we looked at it sometime during the week where it, yeah. Okay, so Merck, M-R-K. M-R-K. Okay, we'll take a gander at it in a little bit. When do you think a good time to buy? Parizia. Okay, interesting. When do you think would be a good time to buy? They're still going down. Now, I'm not quite sure which one we're talking about, because I'm talking about Intel at the moment, and I don't know when your question was. Can you do LRMR? Jose, ¿qué pasa, amigo? LRMR. Never heard of that one. LRMR. Alright, it's on the list. ENB is the next one. Now, we looked at ENB. That was a no. Honeywell's next. H-O-N. H-O-N. Okay, give me a second to go on these questions. Bama Redneck. Carnival Cruise Line was on Warren Buffett's list with no dividends. Is that a yes? Well, that's a personal call. Okay? Now, I would take a look at Carnival Cruise Lines. Let's take a look at it for a second. CCL. Okay, so Carnival Cruise Line, even though it doesn't have any dividends, this is what the chart looks like. Because it looks like a good time to jump in if you like Carnival Cruise Lines. Okay, 30-day high was 2 weeks ago. Okay, that was at 1950. Then she dropped 25%. I remember talking about this a little while ago. She dropped 25%. Here's where we are now at 14. So the question is, do you like it at 14? Okay. And at 14, well, it's going for 51 cents. Can that be right? Okay, let's go 0.51 divided by 13.98, because that's the purchase price at the moment. 3.6%. Well, that's an interesting question. Do you like Carnival Cruise Line at 14? And if you do, well, you can sell it at 14 and get 3.6% for 1 week. So that's a question you need to ask yourself. Okay? Now, if you buy it and it goes down, well, you just hold on to it, because never buy something you do not want to hold long term. It's actually that simple. Poseidon's last molar. For pricey stock like CAT, why not just buy half in many contracts? Yeah, okay, smarty pants. What about LTR? What the heck is LTR? LTR. Okay, that's a no. No options at all. That's an easy one to figure out. ASX. No. See, I find it rather strange that people. I find it rather strange that people will buy stuff and they can't explain why they bought it. So here's a question: if you're buying something, don't you think you should do some research into it? Are they profitable? Why are you buying it? Are you looking for capital appreciation, or are you looking for a consistent cash flow? Me, I like a consistent cash flow. Buy it on Monday, sell the options on Monday, get out on Friday. That's ideal for me. Now, ASX and LTR, never heard of either one of those. Now, don't get me wrong, they might be great people, but if I've never heard of them, it means they don't have 20 years of increased dividends, don't have weekly options, or something's just not right. All right? So, Parisia, Amazon's on now, they don't have dividends. Can you do LRMR? Question mark. LRMR. Yeah, it's a no. Imagine that. LRMR. Like I said, never heard of it before. It's a no. It's a monthly optionable stock, which means the most I'm going to get out of it is 24% a year. If you like 24%, hey, have at it. More power to you. I only do weekly optionable stocks, and the reason being is I don't like trying to figure out where something's going to be in 4 weeks. It's hard enough to figure out where it's going to be in 4 or 5 days. So if I'm jumping in tomorrow, I want to have some kind of idea where it's going to be next Friday. Well, that's only 5 days away. It's a little easier than trying to figure out where it's going to be in 4 weeks, especially when she's down here, right? She's down here. Usually, what does that usually mean? Eighth is right there. Goes up, comes down. You're at your new 30-day bottom. 30 days ago, we're here at 760. Jumps up to 11. Now she's dropping back down 715. Well, what do you think is going to happen? She's going to turn around and go back up eventually, once it finds its 30-day bottom, or a bottom, and then you figure out, well, where's that bottom compared to where we are right now, and where's it going to go? Great, fine, dandy. I just don't do monthlies because they just don't pay the same. If you had your choice, here's an idea. Let's say you have a stock over here, stock A or stock B. This one over here will get me 1% per week. This one over here will maybe get me, 2% per month. 1% a week, 50% a year. 2% a month, 25% a year. 50%, 25%. 50%, 25%. It's really not that difficult of a choice. There, you know what? We haven't done this in a while, and we got plenty of time, so let's do it. We're going to go take a look at FinViz. Now, FinViz is a financial visualization website. A lot of neat stuff you can find on here. But what am I looking for specifically? The stock screener. Because a stock screener will tell you exactly how many, certain things. Okay? Target price, average volume, dividend yield, index, exchange, earnings dates, price, sector, volume, options, blah, blah, blah. A lot of interesting stuff you can find there if you want to pick out your stocks. But what am I looking for? For examples only, I'm looking for this right here. This is the current number of companies available for consideration. 9,597 companies that I can choose from on any given day. So I'm going in, okay, first thing tomorrow, walking into the stock market store, whatever. I'm walking into the store and there's 9,597 choices. That's a lot to choose from. Well, I don't know about you guys, but I want certain, I have certain expectations where I put my money. Okay, I don't do speculation anymore because I'm at that point where I want safety, predictability. Okay, safety and predictability because I have certain bills that come due predictably. All right. Well, that being said, what am I looking for? Well, I'm looking for something that has a dividend yield, which means they have some kind of a dividend and it's on the positive side. So if I look at anything over 2%, let's go over 3%, just for the fun of it. Okay, how many stocks? From 9,597, we are now down to 2,600. That's huge. Okay, well, what if I want to do 4%? Okay, 4% yield, well, I'm looking at 1,884 companies now. That's still a lot to look at. Now, how we go over to this side over here, and we put in options because I want it to be optionable. The only thing I don't like about this, it doesn't give me the distinction between weekly options and monthly options, but it does break my list down to 1,006 companies. Well, that's still a lot to choose from, but I like the way I do it. 20 years of increased dividends and weekly options. So out of that 9,600 companies, there's only about 300 that consistently increase their dividends, which means, in my mind, they're consistently profitable. Because if they're not increasing their dividends, well, they're not making the same amount of money. Because in order for you to increase your dividends every single year, well, you have to make more and more money every single year. It's kind of logical if you think about it. Amazon doesn't pay dividends. You're absolutely right. That's why Amazon is not on my list. Jose, monthly. That's a no. Carlo, okay. Hog. Oh, look at this. Roj wants to take a look at Harley Davidson. HOG. Now, I think I bought Harley Davidson maybe once or twice throughout the years. Okay. A year ago. Okay, Harley Davidson a year ago was at 36.68. It bottomed out at 25.59, and that was towards the end of October. Topped out at 44.28, and that was in mid-March. From there, let's take a look at the last 30 days. This is what Harley Davidson is looking at the moment. 30 days ago was the 30-day bottom. Shoots up, pulls back, shoots up again. There's your 30-day high, close to 39. From there, she dropped down. Now she's shooting back up again. It's kind of in between the bottom and the top. That's always the tough choice. Because is she coming down? Or this bottom, does that indicate that she's going back up again? These ones are a little wishy-washy for me. But at 35.20, the 35s are going for $1. You take that 20 cents off there, you're working with 80 cents. 80 cents is still 2%. If you like Harley Davidson, that's the big question. Do I like Harley? Do I mind holding it for a long period of time? Because if you hold it for a long period of time, you can do this weekly options every single week. All right, so if I jumped in at 35.20, I can sell 35 back the $1. I can do it next week. Okay, do it again next week. Look at that, $1.35 for next week. The week after that, okay, $1.50. Okay, the further out you go, the more you get. So let's say hypothetically you like Harley Davidson. You know what? I'm not going to be around for a while. Let me do 3 weeks out and collect $1.30. That's over 3%. That's still 1% per week. That's what I'm looking for, 1% per week. If I like the company, great. I'll buy it I'll set it up for 3 weeks away, and then won't have to look at it for another 3 weeks. Jump on, take a look at 3 weeks. Where is it? Meet my target? Not meet my target? What do I do now? Okay. I like certain companies. I like them over and over and over again. As long as they're consistently paying me, and as long as I'm consistently getting higher and higher dividends every single year, I'm good. But that's me. You guys got to figure out what's right for you. Everyone's different. Pork belly, yeah. Hi, Poppy. All right. What about RTX? What the heck is RTX? RTX. Okay. Well, RTX, believe it or not, is on my personal list. My eyes are starting to defocus. That means I've been up too long today. It's almost time to go to bed and turn into a pumpkin. All right, so we're looking at RTX at the moment. What is the first thing I see on RTX? Take a look where it is right now. That right there is an automatic no. No sense even going any further. Okay, because I don't like buying at a high. Because your low is down here in October for the year, and a nice escalation to where she is now. Way up there, she's at the high of the year. So, do I like RTX? Well, it's on my list. If the numbers don't work, then it's still going to be a no. Because if I'm buying at 114, the 114s are going for 169. That's over 1.5%. Fine, dandy, over 1%. But I have to wait for it to go higher. It's never been to the 120 area. So what makes me think just because I'm buying it's going to hit 120? Well, most likely, it may not. It's never been there this year. So what makes me think just because I'm buying it, it's going to hit it? Now, some people have that mentality. I'm going to buy it, it's going to go down. Of course it is. It goes up, it goes down. That's all they do. Stocks do not come to your house, wash your dishes, put them away nicely, make your bed, put the little candies on the pillows before. Yeah, no, they don't. They go up, they go down. They go up, they go down. That's all they do. Hey, Hakuna's signing in. Hakuna, how are you? And how is the weather in Sweden today? What time is it anyway? It's 11 p.m. here. Can't even imagine what time it is over there. Okay, Nick. Has this strategy been pretty effective for you? I do like the logic behind your method. Well, Nick, I appreciate that very much. Why does stock price over 250 matter to you? 1% weekly gain is the same. Yeah, I get that, Charlo. I really do. Okay, but here's the thing. At $250 a share, 1,000 shares is $250,000. Okay, I like buying in 1,000 share increments, 10 contracts. But when I separate my money, okay, like when I say 98% of my money is invested at all times, whatever that figure is, 25% goes here, 25% here, 25% here, 25% there. And if I am at $250 a share, okay, and if I have the dollar cost average, well, that takes a big fat chunk of my money. Okay, so if I put, let's say it's 100 grand. I put 25 grand into one company, and it drops, and I want a dollar cost average. Well, now I got to put another 25,000 into it. That's half of my money. I like to do things systematically. So 1 plus 1 equals 2, 2 plus, so on and so forth. Make it simple, safe, and predictable. I don't like to make things complicated. Now, this here, what you guys are witnessing here, this is dividend not dividend capturing, well, kind of like dividend capturing 2.0. That's where you're looking at the dividend and you're trying to get the stock just before it goes up. 6 in the morning in sunshine yesterday, hopefully today too. How's the weather? I heard something about a hurricane in the U.S. Yes, we had a hurricane here. I think it was yesterday and the day before. Sunday, Monday, I think it was. In a mess. That's what it does. Yeah, so Charlo, I like 250 and below. It's just a comfort level, I guess. Drink some water. Yeah. I'm not used to talking so much, but I'm getting better at it. Dan, how did this week treat you? I feel bad when I say I made close to 3% this week. And I feel bad for that because I get a lot of questions. People, I'm losing money. What's going on? Why is it crashing? I don't really notice it because what I'm doing is not normal. This is not normal trading. People do not normally get 30, 40, 50% per year. It's a strange strategy. I came up with it for my 9-year-old. When she was 9, she wanted to learn to trade just like Dad did. So I had to come up with a strategy that works specifically for her. Simple, safe, predictable, consistent, and no way that she could lose. 5 criteria. Okay? 5 rules. Never buy something you don't want to own long term. Never sell at a loss. Make sure the company has increased dividends. That way you know they're continuously profitable. Weekly options so I can get a weekly cash flow. And then make sure the numbers work. What are the numbers? Well, what am I buying it for? What am I selling it for? Is it the right time? All these questions all go together, and it's really not that difficult. As a matter of fact, let's go into a quick sample trade, and I'll show you exactly how long it takes me to take a look at 5 or 6 different companies. All right, you ready? Are you ready to rumble? I remember that every Saturday morning. All right, I want to go. All right, we'll take a look at this week. Okay, that says January. We don't want January. We want July. August. All right, here we are in August. Are you ready? Here we go. Now, I'm going to show you how quick, easy, and simple this strategy actually is. Because it's really not that difficult, and I don't know why people want to make it more confusing than it needs to be. All right, real quickly, I'm going to show you how easy this strategy is. We're only going to look at the stocks that are up for consideration this week. And that's going to be this list right here for this week. Okay, the 5th, 6th, 7th, 8th, and 9th. That would be Citigroup, Eaton, Las Vegas Sands, Metropolitan, NextEra Energy, Ford, Intel, KB Homes, British Petroleum, IBM, Siri, Visa, Wells Fargo. That's it for consideration this week. That is it and only it. I'm not going to look at anything else. Okay, I'll show you how quick it actually can be and how quick it should be. Okay, first thing, Citigroup. First thing I want to see, high, low, where was it, where is it, what direction is it? Take a look at this. Okay, highs here, bottom here, 3 days to the upside, great, I like that, 55.93, okay, 55.93, the 56s are going for over 2%, great. Last 30 days, wonderful, here's the high, here's the low, 3 days to the upside, seasonality, what does it normally do this time of year? Normally this time of year, we can look for a spike by the end of the week. Great, that works. And then she's a big drop off. Okay, so maybe, maybe not. If I like it, I'm going to go here, trade. Here we go. And I like the 56s. 56, there we go. Get rid of this. 10 contracts, 1,000 shares. Here's my trade. Buy 10 covered 100, C100s. 16 August, that's next Friday, the 56 call, blah, blah, blah. Here's my profit, 1470 divided by 54,535 gives me a total of 2.69. That's a yes. Then I hit the send button. Okay, so that's that one. Get out of that. Get out of that. Get out of this. Next one on the list. Next one on the list, ETN. ETN. Okay, that's a monthly. That's going to be a no. I don't do monthlies. Next on the list, LVS. Las Vegas Sands. LVS. Okay, it's bouncing off of a bottom. Check that. Not bad. 30 a year ago. 58. Down, up, down, up. Okay, 30 days ago. There we go, 30-day high. Here's the bottom, 3 days upside. Awesome, I like that. Seasonality. Okay, for the next couple of weeks, we're going to stay sideways for the next 2 weeks. Great. Okay, The 38.48, the 38.50s are going for 93. Cool. I like that. 93. Okay. 38.50. There it goes. Right there. Slide over. 1,000 shares. Okay, so this one 970. Clear. 970. Divided by the purchase price, 37,536. 2.5%. I like 2.5%. Why not? Buy 10 covered LVS 100, 16 August 24. That's this Friday. Not this Friday, next Friday. 38.50 call. Open to order. There's the profit. There's the loss. Blah, blah, blah. All that kind of nice, neat, fun stuff. Next on the list, Metropolitan. MET. Okay. High, low, or was it, or is it? Blah, blah, blah. Last 30 days. Okay, up there it is. Oop, look at 30-day bottom. Big drop. 1, 2, 3 days to the upside. 70, 74. Looking at the 71s, that's going to be a no. But here's the thing. Look at the numbers. The last traded price was 68.73. So the 69s are giving over 1%. So I probably would. Seasonality, what does it say? What does this thing normally do this time of year? Here's the blue line right there. Oops. Click, drag. The next couple of weeks, you're going to shoot up a little bit and go sideways. Okay, fine. That works for me. Do the exact same thing. The 71, sorry, 68, that would be the 69, 69s, there you go. Confirm send. Buy 10, covered Metropolitan, blah, 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 blah. 1470 is the profit. Whoops. 1470 is the profit. The investment is 67,536. Grand total of 2.1%. Another 2%. It's like 3 companies so far over 2%. That's exactly how simple it is. I just keep on going until all my money's gone, which in this case is going rather quickly. NEP. NEP. Okay, high over here, bottom there. This is where we are. Here's the direction we're going. All right, so 30 days ago, 26.79, topped out 29, bottomed out yesterday. I'm looking for another day of the upside, so I'll take a look at this one again tomorrow. Other than that, 24.66 to 25 to go for 40 cents, well over 1.5%. That's a yes. I like that. So I keep continuing going further and further with all the different companies I'm looking for. What am I looking for? Well, it's pretty simple. What are we looking at next? Intel, we already looked at. British Petroleum. BP. British Petroleum. Okay. High of the year, 40 last year. She was at 36. Now she's at 32. Last 30 days. 1, 2, 3, 4 gap down in the past couple of months. All right. Well, here we are now. 30-day bottom was yesterday. Today's at 33. Okay. What does she normally do this time of year? Normally this time of year, yep, big drop. Doesn't look like it's a good idea to me. 33.51, look at the 34s. Yeah, 11 cents. No. It's actually that simple. Did you see that? British Petroleum, great company. It is on my list. I bought them over and over again. But it's just not working this week. Okay? Even though you're at an interesting point where she jumps up from the chart, because the 30-day bottom was yesterday. Well, look at the pricing. At 33.51, the 33.50 is going for 20 cents. That's not 1%. So why would I bother? So that's a no. Next one, KBH. KBH. Okay, high, low, where was it, where is it? A little uncomfortable where it is now. Last 30 days, here we go. Okay, this is going to be a no also. Look at the chart. Way too close to the 30-day high. No distinct direction on which way it's going. And it's a monthly. How did it sneak in here? KBH. British Petroleum already did. IBM. IBM. Okay, IBM, interesting, high, low, blah, blah, blah. Where is it? Where is it? Yep, it's going to be too close to the high. IBM 186. Ooh, that was a good one. Ooh, I love a good sneeze. 186.50. Well, the 187s are going for 177. Okay, and that's an extra buck. Okay, not quite what I'm looking for, because the numbers don't really. Okay, so 186.50 to 187, I'm losing a buck 50, a buck 50. Yeah, not quite. The numbers just not working here. Sorry. How do we treat you? Very well. All right, so let's go up some of these questions for the last 10 minutes. Oh, I missed a whole bunch of questions. Yes, I do need an assistant. I'm well aware of that. But it's going to get there eventually. But that's as simple as I can make it. You take a look at the stock, you take a look at the chart, you take a look at the numbers, and then you get a feeling. It's either yes or it's a no. It's not that big a deal if it's a no, because then you can always go back to your fallback companies, like Ford, General Motors, Macy's, Nordstrom's, Kohl's, Bank of America, Wells Fargo, the companies that are over 100 years old that you know aren't going anywhere. What's your advice to someone that bought a non-dividend tech stock that dropped 50%? Should you keep it or sell it at a huge loss? Okay, Hakuna, number one, I don't like selling at a loss. Okay, plain and simple. If it doesn't have dividends, okay, I would be looking to dollar cost average it out, or consistently do covered calls against it until you can get some of that premium. To get some of that capital back. Interesting thing. Well, if you give me the stock symbol, I can take a look at it and then do a rough estimate how long is it going to take you to get back out of it. Because if you're collecting 1% a week on a non-dividend stock, it's going to take a while to get back where you were. Because say if I'm looking at this right here, it's at 186 now. Let's say I bought it for 200. Well, I'd be selling the 190s or the 192s. Something far enough out of the money that it doesn't look like it's going to fill, but still bring in some cash. Okay? So if it's if I'm at the money right now, is 185 is at the money. One strike out of the money is 187.50. That's a little too close to the line. Okay? 190, that's only 2 strikes out of the money. It's still giving a nice premium, but still a little too close for my comfort zone. Depending on what your risk factor is. Now, personally, I like to go 3 to 4 strikes out of money. Now, 3 strikes, you're at 65 cents a share. 4 strikes, you're at 35 cents a share. You're bringing in something. Let me give you my cow analogy. So if I buy a cow and the cow gives me a gallon of milk every week, hey, I'm a happy camper, right? Now what happens one time when she gives me a half a gallon? Do I get rid of it? No, I just keep it. I say, all right, she gives me half a gallon. And then I wait to get back up to that exit point. My exit point is always going to be higher than my entry. So if I'm jumping in at 168, I want to jump out at 168 or higher and still collect the premium. I love it, the premiums. The premiums go right to my account instantaneously. It's like right away. Okay, Jimmy, you're right. I do need assistance, so let's keep on rolling. PMW. What the heck is PMW? PMW. Yeah, that's a no. Puts. FTW. FTW. No. Because FTW doesn't even have options. I'm capturing ET dividend 2% and up to 4.4 on the covered call. OJ, that's freaking awesome, dude. Way to go. ET, energy transfer. Okay, so here's energy transfer. All right, a year ago we're down to what, 1293, bottomed out right around 1250. All right, from there, look at where the high is. The high was just a couple of weeks ago. Okay, yeah, this one, I'm going to say no to this one because it's just weird. That is a weird, that's a weird statement to make. Because look at it, 30 days ago, we're at 1640. Our high is 1650. And she drops down to, what is that, just below 15? And then you get 2 days to the upside. Well, it doesn't have much further to go. And it's just not enough money there. Flash frozen, advantage system, never heard of them. Options last 2 days have been a dream. Way to go, Jack. Good for you. Richard Bruner. So, if you don't need the money for bills, do you reinvest? Yeah. Look at it this way. 92% of my money is invested at all time, or 98%. Okay, so I keep 2% in reserve in case I have to buy something back. Whoa. Arbotco, 11. Okay, you just joined in, dude. I'm getting ready to sign off. Now I'm here at 9 o'clock to 11:30. Okay, it is 11:26. Okay, so from 9 until 11:30. So if I don't need money, do I reinvest? Well, yeah, of course I do. So look at it this way: 98% of my money is invested at all times. Now, out of that 98, I spend a lot of it, but a certain percentage goes back in, so I have some growth. Not a lot, but enough. So, if you are at a huge loss, is it better to sell an option far out in the money so you don't lose a stock, since you don't want to lose it, since you're down? Well, basically, that's exactly what I say. There's going to be a balancing act. You have to take into consideration how much does the stock move on average on a daily basis. How do you do that? Well, if you look at the numbers up here, okay, see all these up here? The one that says R right there, that one is the range. That's how much movement did it make during the day. So you take your cursor and you put it on there. Okay, this day right here, 22-cent movement. This day here, 22 cents. This day here, 24, 42, 27, 13. As you can see, there's not much movement in this company here. Now, some companies have a larger movement. So, if you own, like this company here, let's say you own it at 30 bucks and right now it's at 15. Okay, yeah, I'd be looking at the 17s, the 1750s, because you're bringing in something. Okay, something is better than nothing. So, as a little tiny something, slowly chip away at the cost basis. Because if you're into this one at 30 and you're collecting 3 cents a week, well, week number one, it's $29.97. Week number two, it's $29.95. Week number three, $29.87. And it slowly gets eaten away, slowly, slowly, slowly. So eventually, because the stock's constantly going to move, but I would always want to be at least 3 to 5 strikes out of the money, but still have something in. And then if you're looking at it, I look at it twice a day. In the morning with the live trading group, because I do have a live trading group for those that actually want to trade live and watch what I do and to ask questions. But I assume the percentage is very small when you sell out of money. Yes, Hakuna, it is. Okay, but again, back to the cow analogy. If I buy a cow and it only gives me a quart or a pint, I'm not going to get rid of it. Okay? Now, you can always go 2 weeks out, 2 or 3 strikes out, 2 or 3 weeks out, and then you get a higher rate of return. But it's still you're still chipping away slowly. All right. So it is 11:30, and we got a couple of questions. I'm going to go over the questions. I'm going to call it a day. So Rich Bruner, if I don't know, yeah, I do. I reinvest it. Anything is better than nothing. You're absolutely right, Hakuna. Anything is better than nothing. CCI, okay. TGT, okay. That's it for the questions? Well, alrighty then. Macy's not going away. Macy's not going away, really? Well, Macy's has been around for over 100 years. Okay, they had an offer for a buyout at 22 months ago, and they said no. Said, worst case scenario, we will buy the stocks back ourselves at 24, because apparently they don't want to sell. Okay? So no, I don't see Macy's going away anytime soon. MPW has options. Yes, it does, Camera Sexy. Jimmy, thanks. Have a nice evening. You too. Are investors going to be more sensitive about jobless claims? I honestly couldn't tell you. Okay, so we're looking for profits. I'm not quite sure. Now, the stock market has been around for over 400 years. In the last 400 years, there's been a lot of crap going on around the world. Just in the last 100 years, we've had World War I, World War II, Korea, Vietnam, the Gulf Wars, Afghanistan, Iraq, Kuwait, Cuban Missile Crisis. Cool. And then you have, the stock market crash of 2029, the Great Depression. Then you have the oil embargoes of the 70s, okay, the crash in 87, the crash in 2000, the crash in 2021. Okay, have a good evening and thanks for sharing your knowledge. You're welcome there, Gunnar. So if you think about it, there's a lot of crap that has been happening over the last 100 years or so. So the stock market's not going anywhere. Yeah, things are going to get a little weird, but if Ford has been around for over 100 years, Coca-Cola has been around for over 100 years, I'm pretty sure they're going to continue to make Coca-Cola after all this presidential crap is done and out of the way. The next 15, 20 years, they're probably still going to make Coca-Cola. And think about it. They've been making it for over 100 years. Why would they stop now? There are more drops, probably. Yep. Yeah, Roger, it really depends on what and where you are. And it's still 1% plus dividend. It expires on the EX date, so I expect the price to drop, probably. Thanks, have a good night. Elizabeth, nice to hear from you. Wow, I'm missing all these questions. Okay. What do you think about Centerpoint? BK, check with me tomorrow night, and we'll take a look at it tomorrow night, because I'm just ready to call it a day. Gunner is buying back a sold put and then buying a call of the same stock, a wash sale. I'd have to see an example because it depends on the numbers, actually. Which company, sir? KOA? I have no idea what you're talking about. What's on the board behind me is ET, which is Energy Transfer. All right, BK, you asked me about Centerpoint. Okay, I'm done for the night. So Centerpoint, if you want to take a look tomorrow, same thing with Sir 2389. We'll take a look at Petco tomorrow. Taro, Delta costs to make a trade every week in percentage typical. Charlo, I have I'm very cloudy on what that statement is. Because it doesn't sound like a question. Delta cost to make a trade every week in percentage typical. I have no idea what that means. Okay, thanks 86, get that guys in line. Thoughts on Centerpoint? Yeah, Centerpoint, I need the ticker symbol number 1. Number 2, we're going to do it tomorrow night. Good night, Poseidon's Last Molar. Thoughts on CNP? I'll put CNP on the list for tomorrow. CNP on the list for tomorrow. Okay, does it cost money to make a trade, buy and sell? Charlie, it depends on where you have your account, because there are some accounts that have zero cost trading. L Trader, dude, I'm just getting, okay, L Trader, I'm just getting ready to leave. Okay, I'm here at 9 to 11:30. Delta intrinsic value lost cost. Yeah, I get that. Okay, I know what the delta is. Okay, but the delta is a little bit more complex, and it's only one portion of it is what he asked. Yeah, I get that. Yeah, we'll go over that tomorrow night. It is past that time of day, and you guys have a great night, and we'll see you again tomorrow, 9 p.m. Eastern Standard Time to 11:30 p.m. Eastern Standard Time. Have a great night. Talk to you again tomorrow. And you guys down here at YouTube, you have a great night. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, safe, predictable, and consistent. Have a great night, and we'll talk to you again tomorrow.